Great piece out today, Brian, about just how many hedge funds there are that have taken on exposure to what have been the darlings of the past, JD.com and the like, and now getting burned.
Yeah, I mean, one of the things that's really interesting about this week is we get to see all the hedge funds positions as of June 30th. And that was right around the exact time that China's crackdown started to begin. So when you have these positions as of June 30th, you know that unless they sold the day after they reported these, they were probably caught in this sell-off. So you did have a lot of folks, Viking, Melvin, Cotu, buying into JD.com. You had Rokos buying into Alibaba. So they've taken it on the chin quite a bit here.
All right, so that means you guys have had a lot to talk about on the other side of the room here and make a lot of hay. I guess the question, though, is how many of these folks are really true believers in this story? We talk a lot about Cathie Wood and her sort of commitment to some of these names and the idea that there is a longer-term story in China, that at least she's willing to sort of stick it out. Is there any evidence that some of the folks that you just mentioned are also willing to stick this out?
Yeah, definitely. I mean, first of all, there's Ray Dalio. He basically is just saying, oh, this is just the Wiggles and focus on the long-term trend.
Did he use Wiggles?
He used Wiggles in a LinkedIn post. You can read it for yourself. He's been writing a lot on LinkedIn lately. But also Tiger Global has been investing there for more than 2 decades. They've said they're committed to China for the long term. They invest in a lot of the names like DD Global pretty early on. So, so I mean, I think there's any number of them that are saying this is just a blip, and you have to understand that there are risks associated with investing in China. It's not like the U.S. It's a different form of capitalism is the argument that they're making.
And Caroline was on it yesterday with the intradays of some of the U.S. ADRs of some of the Chinese-based companies. Further getting spooked yesterday. You're getting more news today. Has the reaction been mostly negative across the board?
Yeah, I mean, the Hang Seng Tech Index is down at the lowest since June 2020. It's really interesting because if you're focused so much on U.S. stocks, it's just another day, another record for the S&P 500 index, it feels like. But then you actually look at China tech stocks, and they're really down quite a bit. They're on a 5-day losing streak, and some of these names in particular are down 10, 20, even 30% over the past few months.
Romaine, the only Bloomberg Opinion column you need to read today is the one where Brian is going to defend the CFA charter against another Bloomberg Opinion column.
I've read this column.
That says it is a waste.
Oh, no, you're going to give me my thoughts on the CFA live? No. No, I mean,
just tell me it's a waste of time. Make me feel happy.
I would say I studied 1,000 hours for those exams, and I learned a lot. Did I lose a lot of that knowledge over the course of the years? Yeah. Probably, but I'm here now, and I think I do a good job on
here. For level 3, it's an
adjective,
not a noun.